My name is Patrick Hawe. I'm an associated member of T3 Trading Group, which is a registered broker-dealer, and member of FINRA SIPC. All trades placed by myself are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Please pause the video, take the time to read this disclosure. We very much appreciate it. And position update, still no new swings for me since you guys last heard from me. Still just taking it easy and being as patient as I can with this market, which so far has been good. All right, let's get into it. So Zoom trading up after hours on earnings. They just guided up actually, which is a nice change. These earnings reports that have been coming out have all been pretty disastrous for the most part, and the ones that haven't been disastrous have still been kind of getting wrecked. Even like AMD comes to mind. AMD had a pretty good earnings report when they came out, and then they gapped it up, but then when the market actually opened, they ended up selling it off. So Zoom, I'm sure a lot of pessimism was built into this one. So pretty big jump here, and they were pricing a pretty big move too. Looks like it closed around like 88 or so, and I think they were pricing almost $20 of a move. So this is pretty big. Probably stops around here based on that options pricing, but all the less, hopefully this does help some sentiment a little bit with the market. So let's get into it. Let's talk about what the market did today and what we can expect going forward. So that being said, there's not really going to be a whole lot to talk about. So what did the market do today? So we came in today gapping up. With that being said, gapping up a lot less than what the futures were showing. I think when we came in this morning, we were probably only gapping up like 0.5% or something. And I remember last night we were gapping up well over 1%, especially in the NASDAQ was gapping up pretty well. Pre-market, we opened and kind of all over the place up into the market opening. And again, a gap up, not a huge gap up, and a gap up into a daily downtrend. I've been talking about this parabolic downtrend that we have been in for a few weeks now and continue to reside in. And today's action does not change anything. But it was a quieter day for sure. This market's been moving pretty insanely like all day, every day. There's barely a 10-minute break where, you can kind of take your eyes off the screens because things are just jumping every which way, especially during the sell days. These sell days that we've had have just been like nonstop throughout the session. So today was, I guess kind of a nice break from that, although that might have probably chopped some people up a bit. Market kind of causing, doing its thing that it loves to do, causing max pain for both sides. So again, coming into today, what I was saying this morning was basically 3,900 and 3,950. Where we were opening was kind of a tricky spot. Again, the gap wasn't big enough where it was like a really big gap and go. Shorts are going to be panicking. It was just, kind of a small gap up after a nice rally Friday afternoon. But, that still, look at this daily candle from Friday. I don't really love this daily candle at all. Some people could call that a hammer. I wouldn't really call that a hammer, although you do have a tail there. But still a close below the open. So coming in this morning, I think at least my game plan and a lot of our game plan was really to kind of be patient and see how we treat the gap up. So again, either time or price correction for this gap to be filled. How do you evaluate that? Typically, we'll look at, the equilibrium starting with the 80 EMA and the 21 EMA on the 5-minute chart. So a price correction, we would open, sell right down to it, and then we see if we can pivot off it or just keep selling. Price correction, which is kind of more of what happened today, really just like chopping around while these moving averages rise and catch up to price action. So 3,900, 3,950 for the downside and the upside levels. Basically 390 and 395 for SPY. SPY's really been kind of just like every 5 points is a bit of an inflection level. No real perfect reason to that. Might just be psychology. But that being said, it's been kind of like these 5 level increments. So you can see market open this morning, chopped around, open, lows, highs, 5-minute moving average still hadn't really caught up here, back down into equilibrium. So most people are probably, getting a little bit too excited here, a little bit too early on, try and be patient for this moving average to catch up. Back down, sure, we're breaking new lows, but now we're really just catching up into equilibrium here. So, what were we watching to try and either confirm or negate this action? The VIX was really strong really early, but ultimately, same thing but different on the upside. Rose up into equilibrium, but equilibrium was coming down, and then ultimately got rejected. So SPY was able to get above 395 after this, kind of like it was a bit of a time and price correction here, but just choppiness, price correction, moving averages catch up, bumping our heads into 395, and then finally we break out through 395 and grind it higher for a solid hour or so. And that's really all we did today. We closed above 395, which is good for the bulls. Shows some strength, some signs of hope here. But really, after this breakout at 11 o'clock this morning and this grind higher, we ended up really doing nothing all day. I was kind of saying that at the end of the day, even if we close around here, we close around here. Really, since like 11 o'clock this morning, we've done nothing and made no progress. So where does that leave us going forward? I think it leaves us really in the same place that we've been in. This is a daily downtrend. The overall macro outlook certainly didn't improve in any way today or over the weekend at all, I don't think, in terms of like supply chain and stuff like that. You still have the whole Russia-Ukraine situation going on, which obviously is a disaster and we hope gets resolved soon. But who knows what comes of that, really. We did close just above the 8-day here. But again, nothing really too special here. I don't think bulls, came in with fists of fury today and it was just huge bull flow all day and things were ripping. And, again, like we're closing above 400 with a huge green candle, maybe even like closing around the open of this red Maribozu candle here, which this is really the first step that bulls need to negate in order for bulls to at least somewhat look better. Again, Friday's rally and today was, although it was somewhat exciting in the bigger picture, it's really doesn't change anything. So again, SPY's trading up a little bit after hours here, I guess partially on Zoom, up into the 397s. One of the key factors that we saw this morning, I think that helped determine that relative strength, was not only the VIX not really being able to push higher. VIX pushed higher above 30 briefly today, but then fell back down. But the other key one, which is really, probably the most important stock in the market, partially just because of how heavily it's weighted in the Qs and the SPY, is Apple. Apple's been very relatively weak the past few days. Even on Friday, not really that great. Below 140 all day on Friday. But today, relative strength very early on. You can see here, although the market pretty much opened, went through lows, went through highs, and then went down and made new lows again before, that like third new low it made was when the moving averages really caught up, stopped going down, and then kind of turned I'm trying to think like the right word for it, but like roughly turned back around and then went up through highs, and then that's when it actually cleared 395. That whole time the market was chopping around. You can see Apple here opened first 5-minute bar, gray green bar, and that's that was it really. So relative strength very early on from Apple, which a lot of us identified in the room. I think a lot of you guys played Apple today and hopefully played it pretty well. So again, Apple opened, came up through 140 in the first 15 minutes or so. And I'm guessing this pullback here in Apple, this is probably where the SPY was making its, third new low on the day, but getting into the equilibrium zone. So kind of like just a back test of retest of 140 here. Only under 140 for 5 to 10 minutes, but right back up over 140. And that 140 is a big level. We always talk about how clean Apple trades. Apple really likes to respect levels. It seems like it's the only one. I can't really even think of anything that trades this clean anymore, which is nice that there's at least something like that still trades clean. And obviously it's not perfect. The market's not a perfect place, but if Apple was going to be weak today and continue to be relatively weak, it really should not be getting above 140 at all. And if it is, it should only be kind of poking its head up above it maybe once, and that's it. That's what it did on Friday, right? Like, look at 140 here for Apple. Apple is strong, right away on Friday and looking good, above 140, but then back below 140. It's got to get back above 140 or it's toast. And that's pretty much what happened on Friday. And now today, the opposite. Up through 140 again, back down below, and then back up above through 140. It should not be getting above 140 if this is going to be strong. So early relative strength in Apple, again, above 140, as well as just holding its opening low, definitely was a positive sign for the market today that a lot of us called out pretty early on. So that was nice. That helped kind of give SPY its boost up through 395. And then that was really it. After this morning, after like 11 or so, this grind higher, came back down, bounced up towards highs, couldn't really make much more progress though. Rolled back over, really just choppy action this afternoon. And again, I don't think bulls did anything too special today. Yes, they held well. Yes, they held their gap up. Yes, they didn't fail for once today. But one day does not make a reversal, that's for sure, including Friday's rally. So, going forward, what am I looking for personally? What do I expect personally? I really think tonight's gap is going to be fairly important. That gap may come from new overnight news from overseas. It may come from just new action in the markets overseas. There may not be much of a gap at all because it just, today was a quiet day. It was a quiet afternoon. We might see a quiet day in world markets tomorrow as well. But depending how we gap, I think is going to be fairly important because now we're getting into the real tough resistance area. S&P 4000, SPY 400, and then this 21 EMA, which has definitely been a rock wall really since we broke down from it back in like early April or so. So if SPY can, so it's tricky. If we gap down tomorrow, this is kind of just like how I think it's going to play out. If we gap down tomorrow in a big way, there's definitely a risk of a gap and go to the downside, especially we've been looking at like that percent threshold or so. If we were to gap down 1%, we would probably be gapping below this entire afternoon consolidation, below 395, below this afternoon's action. I think there's a risk of a gap and go to the downside. If we don't gap big to the downside, and it's just like a flattish small gap, either up or down, I still think you respect your kind of like $5 increments. So if SPY is gapping down from 390, SPY's trading mid 397s right now. If SPY gaps down to 396, I still think it's okay as long as it's above 395. But again, back below that 395, they may start to let things go. In a small gap up, we're still okay. We're still continuing this kind of grindy upward trend that we're starting, that ignited from Friday afternoon's rally. If the gap was up too big, there is a potential, I think, of either way of this being a fail back down or a gap and go to the upside. Because on the one hand, you'd be gapping up into the upper band of equilibrium. You're gapping up above 400, so there's a chance that they fail that. They fade it, and then we just drop right below 400 again. So that'd be like the bearish argument for what happens if we gap up decently. But on the bullish side, again, shorts really might start to get worried where, all of these up move, maybe not all these up moves, but for the most part, these up moves haven't really been too worrisome for shorts. Anyone that's shorting here caught this move down, you're still in the money here, you're still in the money here, you're still in the money here. Market takes its next leg lower, still in the money here. Market tries to break down, tries to make its next leg lower, and now hasn't really been able to make that next leg lower. So if we're able to negate this Maribozu, this big red candle, shorts might start to, not necessarily be in trouble, but just, okay, maybe we are going to get that bear market rally to like 420 or, 415, 420, something like that. So they might be a bit more aggressive in covering. So I could see it going both ways. And I hate to not give like one clear thought or one clear answer of, we're going up tomorrow. But I don't think, this market's been way too crazy and way too two-sided to just not have a game plan and like a scenario laid out for, if this happens, do that. If that happens, do this. And if this happens, do that. And you're kind of ready for anything that way. Just because, again, having a bias in this market, if you're wrong at all, it's been very, very hard. So again, kind of just to, quickly recap, I think if we gap down big tomorrow and we're gapping below 395, there's a risk of a gap and go to the downside. If it's a small gap, not really big either way, I think we're okay as long as we're above 395. But if we lose 395 tomorrow or in the coming days, then, this daily downtrend, which is parabolic, although we might be looking to break out of that soon, that just continues, and we just continue our daily downtrend. Don't fight the Fed. The macro environment is all the same. And then if we gap up, it'll be an interesting first 5 to 15 minutes of, is this a gap and go to the upside? And that will definitely come from a time correction. It'll be pretty obvious that although we're gapping up really big, we're not selling off really hard right away the way we should be. And then otherwise, if it's not going to be a gap and go to the upside, then they probably just fade it right away. And, we open above 400 and, it's just red bar. They just fade it right back down. So I think be ready for anything. Bulls are showing some signs of life, some signs of hope, but it's nothing to get excited about here from this daily chart at all in any way. And again, we could definitely go up to 405, 400-ish, 405, maybe match this high, maybe poke it out a little bit, but still overall stay in this daily downtrend. So bulls have some hope, but they still have some work to do for sure. And yeah, what else? I guess a couple of names that we looked at today besides Apple. There wasn't anything too special. We were looking at like XBI over 70, which this was, all right. It kind of just bounced around this 70 level a lot. So, could you have made money playing this off 70? Yeah, but, not great. And again, this is, this would be like, I would argue on the bear side for this, where this had great relative strength. Like some of the things that had relative strength last week, I feel like didn't really have too much relative strength today. Did XBI trade down all day today? No, but you would think that if you want to argue for the bulls, like things that were having relative strength last week, which basically relative strength last week was just sideways action when the market was going down, those should kind of be like breaking higher as the market breaks higher. So, this could be like a negative rotation where, maybe they were rotating out of bio in the weeks prior, and then they took a break rotating out of some of the more speculative stuff last week, and they were rotating out of Apple and Microsoft and the big stuff last week. And then, are they going to go back to rotating out of this stuff, or are they done selling this stuff is kind of like the question we're asking. So XBI had relative strength last week. Still okay, but this definitely could just break down again. It's definitely, not a pretty picture there. So XBI 70 was okay. CLF was good. Good, but not easy, again, due to the choppiness of this market. I think some of you guys got shaken out here. That's pretty annoying, and I don't think it's the wrong thing to do to get stopped out at the new day low. But I always like to say, especially in this market, and I'm trying to get better at it myself, you don't want to fight stocks, but you do want to be able to see this poke lows, have an inside five, break the inside five up, and say, be able to say, did I get shaken out? There definitely was a possibility to buy back into this. I'm not saying that was like the right thing to do, and it's definitely not easy to do. But the more more max pain, it went through the high and then it went through the low, and then now it's going to go all the way back up and break day highs. Like, there's no way I'm chasing this high, but then that's the high that you're supposed to chase. So CLF was okay, better than XBI. Definitely annoying if you got stopped out here, but not it would not, especially if you were buying here and you got risk covered and then some and you were up on the trade. I don't think it would have been impossible to recognize kind of this just poking out, but still in equilibrium right here, and then still respecting and grinding higher. I don't think it would have been impossible to get back into that, and this did actually close pretty well. So if you're still in CLF, great. If not, and if you got shaken out, no worries at all. That's just how this market's going. It's a very choppy, very sloppy market. So that was CLF. And what else? JD we talked about, but JD never triggered. We were looking at long JD through 55, but that did not trigger. Pretty tight day for China today, not really in play at all. So that's it for the market. I do have a cutoff. I have a meeting at 5, so I have to cut off a little bit before that, but happy to answer any questions, comments, complaints, concerns regarding anything really. Again, not too much to talk about today because it was kind of a boring trading session, which I guess was a little bit nice, considering how crazy things have been. But, again, really, SPY, basically the main thing was SPY held, broke that 395. So held 390 to the downside, broke 395 to the upside, closed above 390. Definitely some room to test 400, maybe 405 or so. But overall, still in a daily downtrend. The bears are definitely still in control. Don't fight the Fed. The Fed is still fully hawkish. Inflation is definitely still a problem. My gas prices are still high and seem to be going higher. And oil is the best looking daily chart you can find out there. This looks dangerously good, to be honest. So. We'll see how we gap tomorrow and go from there. Let's see what questions you guys might be talking about. Thoughts on breadth today? I feel like the market wasn't as strong as index shows because of strength in Apple, Microsoft. Yeah, I agree, Derek. And that's, I guess, what I was talking about with XBI. It felt like the stuff that was relatively strong last week. I know for one pins, which definitely doesn't have that much impact on the market, but was a very relatively strong stock that I'm in last week. This was not that great today. XBI, not too great today. How'd these semis end up doing? Semis ended up doing okay. But even Facebook today, Facebook has been relatively strong, arguably a good value play at this point. Some people would definitely argue. Relatively strong sideways with the market. So you would think that with what Apple did today and with what the market did today, you would think Facebook, given its relative strength from last week, would be a shining star and would easily be bursting through 200 today. And I was watching Facebook all day today because of that. I didn't end up trading it, thankfully. But this just couldn't really go. I kept wanting to buy it through highs. Finally, when it went through highs, I didn't end up buying it, and it ended up coming back down. But this one, for example, I feel like it definitely should have been stronger today with what the market did. So take that how you will. I would take it bearishly, But yeah, I totally agree with you that it felt like things weren't as strong as the index today, possibly because the index, SPY up 2%, Apple's up 4%, Q's up 1.7%, and again, Apple's up 4%, Microsoft up over 3%. So yeah, I would take that bearishly, and I agree with you. Trade what you see, not what you think, for sure. Price action is so important. Can't tell you how many times you read tape and you just feel like I always talk about like trading, like honestly a lot of it is kind of like an art as it is a science, and you need to know math and this and that, but like when it comes to just like gut feeling and stuff like that, like there's no way to really teach that. It's just kind of experience. And that's like a great way to say it. Play and trade what you see, not what you think. You see the price action's good or you see the price action's bad. Don't fight that and try and be like don't try and be a wise guy and fight that. Just keep it simple. And usually doing that is where you really make the money. If you overthink, that's not really what the best traders do. Josh has that written in big bold letters on his computer. I'm working on that with the bear market rallies. So far, no bueno. Be patient is all over Aaron's monitors. Yeah, for sure. IWM 179 looks like serious resistance. What is the Russell 2K market saying? Yeah, so I know Derek has been talking about how important it is to watch the Russell, and I agree with him because it's so much more broader and speculative in nature than like a SPY or a QQQ that's so heavily weighted by FANG. So what are you saying? 179 you think is, what did you say, weekly? Some serious resistance. Yeah. I mean, it's definitely resistance. It's kind of like 179 to 180 zone, I would argue. Yeah, I would argue it's like 179 to 180, kind of that zone. So what's the Russell market saying? I think it's saying the same thing as SPY and Qs at this point. It's in a we're in a daily downtrend. It's holding up okay for the past couple days now, but it's still in a daily downtrend. I don't think it's saying anything different really. The way this index is made, or the way it's structured, is pretty terrible. I don't know how heavily weighted like a GameStop still is in this. I don't know if AMC is still the number one name in that index, but it's just designed so terribly. So I think it's good to watch for like risk on, risk off sentiment. But when it comes time to actually buy, especially in down markets and bear markets, you want to go with tier one quality. You want to go with QQQ. You want to go with Apple, with Microsoft. Sure, you can buy some like big banks and stuff like that, but quality tier one is what you want to buy, and IWM is not that at all. That being said, it's definitely important to watch for risk on, risk off sentiment, but careful. I just hate the way this thing's designed, and the overall yearly performance reflects that too. It's always been so bad, and then it finally catches up, and then maybe it's gonna finally lead, and now it just like completely falls out of bed. So yeah, I mean, I don't think the Russell's saying anything different than SPY and QQQ, which is saying we're holding up okay, but still a bear market, still a downtrend. Nothing changes with that. Josh saying the national average U.S. gasoline price topped $4.50 for the first time last week, with expectations of strong driving demand. U.S. retail price surge, another 35%. Yeah, wow. Yeah, I heard them talking on CNBC today, bringing up an interesting point, basically comparing like the gas prices in, I want to say the years like 2013 to 2015 were not quite as high as they are now, but average household income is 25% higher now than it was back then. So in theory, like this should be able to be absorbed just fine the way it was back then. But I mean, again, if it keeps going up, it's definitely going to be felt at some point. And this oil, I challenge someone to find me a better daily chart than oil. I mean, this like literally looks ready, like it's gearing up for its next parabolic run higher. I guess it could end up breaking down maybe if the whole Russia-Ukraine thing cools off. That could probably give oil a serious leg lower. But oil looks fantastic and doesn't look like it has any signs of slowing down. I think for the most part Zoom went up on earnings because so many were buying puts. I was looking at it and the puts were super expensive. Well, the puts were expensive because it was just pricing in such a big move. So it's not necessarily the puts were expensive as much as just the options were expensive for it. They were pricing in like a 20% move, more than 20% even, I think. But they raised guidance, and I think it's up because they raised guidance, and probably most people did not expect that. So people overly pessimistic into the report, where the best names out there have been missing guidance or have been lowering guidance. Zoom's raising guidance, but Walmart, which is like a super safety play, everyone goes to Walmart. They lowered guidance. It's kind of weird a little bit. I see it's coming down now a little bit as well. But that's it really. Just they raise guidance, and that's good. That's a good thing to raise guidance. So overly beaten up into a report where they actually raise guidance would be probably why it's going up. Felipe wants to know if inflation is transitory. No. Do I pay attention to potential follow-through days down here paired up with flow to see if we get a reversal eventually? Let me reread that, Jerry. Do I pay attention to potential follow-through days down here? So are you saying like follow-through days to the downside, Jerry? I'm a little confused on the wording of your question. No upside follow through. Yeah. I mean, so I've been talking about, and it's the same thing for today too, how the flow has not really been great, and pretty much all of the bull flow that we're seeing is squeeze flow, which basically means it's weekly flow, or it's like 2 weeks out or something like that. It's not like they're going out and buying calls 6 months out in time with huge size, and they're repeatedly hitting that all day throughout the day, and they're selling puts on things and stuff like that. It's not really anything special like that. So I think even tomorrow, honestly, if like I was saying, a gap and go to the upside is not impossible. If we gap, it would not surprise me. I don't think it's going to happen, but nothing would surprise me in this market. Say we gap up over % tomorrow, gap over 400, and then early on, it's just like a gap and go. We take out this candle's high, big bull flows coming in tomorrow. That would be a serious statement from the bulls. And if that happens, we're probably going to 420, maybe even 430 in the bear market, in a bear market rally, which some folks are calling for now. So you're saying if SPY can hold Friday low and give us more authority. Yeah. Yeah, it's definitely possible, Jerry. I haven't seen any hints of it yet, but they might be waiting for more confirmation and a gap and go getting over this candle's high. Definitely could be enough to ignite that for sure. Again, if bears want to keep this parabolic downtrend in place, we really probably shouldn't get above 405, honestly. Kind of this 21 daily 21 EMA. But if we really do start to negate this and we really do start to push, we definitely could see, similar to what we saw here, a bear market rally towards like 420, 430. That would not be impossible. And that would also not mean that we're going to new all-time highs, because that, the Fed is not changing. The Fed's not pivoting anytime soon. Maybe like later on in the summer, if inflation numbers start to get better and demand actually does start to come down a bit, but demand is not down. People seem to still be going wild out there. Inflation's still high, so the Fed is not pivoting. Don't fight the Fed has been true for months and months and years and years. So yeah, we'll see. We'll see though. Even back here, we were able to identify fairly early this kind of breaking out higher. So it's definitely possible that we kind of like wedge out, bump around here, and then break out higher for a move to 420, 430 or so. And I'm sure the flow will help confirm that. Yeah. So definitely things to keep our eyes on. It's more the speed of the increase too is definitely, psychological as well. If it keeps just going up 25, 50 cents every week, every other week or so. Let's see what else on YouTube. Good day, Pat. Were you the buying in the where are you the buying Oxy in the afternoon today? I'm not, so I don't really understand your question, but I assume you're asking about this afternoon rally in Oxy. Energy was super strong today. Oil was pretty good. Not nothing too special. The oil daily chart overall looks fantastic. Oxy got some flow this afternoon. I think really it was just technical with just this range breaking higher. Someone was talking about it earlier today actually on our team, so hopefully whoever mentioned this caught it. But how Oxy was pretty much trading in like a dollar range all day and then just breaking out through highs. And this is what you should be seeing in this market, kind of more broader term, which is like I was talking about Facebook today and I didn't really see it. A good rule in a bear market is definitely to not buy highs in a bear market, but at the same time, if you can find spots where, it's like, okay, if we break this high, shorts are probably gonna hurt and probably gonna cover, and you can push through those highs, going along with like a negative gamma environment where buying leads to more buying. This is what we should see on upside breaks, day high breaks, follow through. Like this is what you should be seeing. So Oxy looks great. Got some flow this afternoon. Daily chart looks great. Oil looks great. If you're long Oxy as a bull, 60 is your real level, and you could probably use Friday's low, a little below 62. It looks like you can probably use Friday's low going forward. But Oxy looks fantastic. Oil looks fantastic. Energy names look fantastic. And they have there's a lot more room for more buying in that sector as a whole, in the energy sector. If you want to start getting into the, relative sector weights and ETFs and everything like that, there's definitely plenty of room for more energy buying. So Oxy looks great, and looks like it definitely can keep going. So don't be worried if you feel like you missed it either. If the global economy tanks, well, yeah, I mean, that's like kind of what the Fed is dealing with at this point, Blaine. You know, funny, but it's really not so funny. But they don't really have much of a choice but to destroy demand, aka send us kind of into a little bit of a recession. Because inflation's not transitory, inflation's not cooling off, inflation's very, very high. And while people definitely want to knock Powell all day, because people always want to knock, the people in power, I would have to agree that it's leaving inflation at 10% plus, like just forever, it's not gonna be good long term. It's better to kind of hurt things now for a bigger overall healthier picture. You can't just have inflation just chilling at 10% for a really long time. And you want to talk about the separation between the wealthy and the poor and like that split, then that's a whole nother conversation. But yeah, so but then they really should do it. They are going on hopes and dreams. Well, I mean, you can't do these things overnight. You can't really do it over a couple weeks either. But it's starting. I think it's starting, which also kind of worries me for the market. The demand destruction, I think, is starting, but it has more to go. And I could be wrong. I mean, what do I know? I'm just some stupid kid. But what I'm seeing out there is people still spending very frivolously, and things seem to be all kind of rosy merry. And I picture like that scene in The Big Short with what's his name, Steve Carell, like walking around on the phone in New York City, and he's like, these people, they don't care about what's going on. They have no idea. They only care about the baseball game and this and that. It's like kind of what it feels like right now. So I don't know. We'll see how things play out. But don't fight the Fed is what I'm singing right now. So. Any other questions or anything? Like I mentioned, I have a 5 o'clock meeting, so probably going to wrap things up if no one else has anything. Cool. Yeah, looks like that's it. So thank you, Derek. So yeah, again, for tomorrow, I think the gap is going to be fairly important. If we gap below 395, we gap below all of this consolidation, there's a risk of a gap and go to the downside. If we gap below, basically 395. So if we're below 395, you can be looking to short. If we reclaim and get back above 395, I think you can be looking to be long. If you're already long and we're above 395, you can look to stay long. 400 is definitely a level. And then this 405, this 21 EMA will be down a little bit more tomorrow. But, negating this candle will be a first step for the bulls. And that will be a first step for confirmation that we actually might get a bear market rally up to 4,200 was like the really, really big breakdown level that we had before. So that would make sense for a test of, 4,150 to 4,200, maybe even a little more on a bear market rally. So we'll see how we gap and we'll assess in the morning. Thanks. Have a good night, everybody.